where the Bank of Canada is going and where it's going, Gavin, this week, almost everybody believes is down by at least 1/4 of a percentage point. That's the consensus call. What is notable is that until the explosion of tariff concerns in this country and the imposition of tariffs by the White House, not in other words, further delaying the onset of tariffs. But prior to that concern, this was considered more or less a coin flip. And now the market is clear and economists are clearly in the cut camp. But how do you see the Bank of Canada's decision at this juncture, Gavin?
Well, Paul, I think, as you said, everybody has come around to the view that the Bank of Canada is definitely going to cut. And indeed, I believe a number of well-respected commentators and economists, David Rosenberg, for example, who was on last week, are expecting the Bank of Canada to actually be pretty aggressive in cutting rates. So we're at 3% now, which, by the way, is a 2% fall in 8 months from where we were the middle of last year. So there's already been a very sharp reduction by the Bank of Canada. But at the same time, a 1/4 point definitely, and it may well be, if the bank feels that things are sufficiently uncertain, that it could even be a 1/2 point cut. But I believe that, for example, David Rosenberg was saying we could end up at 1.5%. And other well-respected commentators are talking about 2 or 2.25% by the not too distant future, because it's one of the weapons that the bank does have. The bank was making the point that it can't do a great deal because of tariffs are not within the remit of monetary policy. But if it feels that they're likely to have a negative effect on the economy, and I think the modelling they did back with the first set of tariffs under the first Trump administration was that, you could easily knock 1.5 to 2% off GDP, in other words, a pretty severe recession, then obviously an appropriate response is to reduce rates and continue to reduce rates. So I think we'll definitely see a reduction, and it might well be even a 1/2 point rather than the 1/4 point, but there will be more to come. It may well be the bank will actually want to keep some of its powder dry to see exactly how things work out, because as we are all well aware, the date on which tariffs are imposed and exactly which particular goods are going to be included or have cutouts or exemptions or whatever changes by, if not the minute, then certainly by the day. So the bank might not want to expend all its ammunition at once, but cuts are certainly coming.
Given that reality, that cuts are certainly coming, or the confidence in that scenario, what sectors of the Canadian equity market do you think will benefit from a lower rate environment here in Canada?
Well, I don't want to sound like a broken record here, Paul. You and I and your colleagues have discussed this on several occasions over the last few months, but obviously those sectors of the market which are regarded as being particularly interest rate sensitive, effectively bond proxies, which are things like pipelines, utilities, real estate, telcos, and to a certain extent financials, are all due to benefit from the tailwind of falling interest rates. And we've already seen some outperformance on that basis. So, for example, utilities and financials are actually up a bit more than the TSX 60 itself, which I think is virtually flat for the year. But they've already started to outperform, and it's likely they will continue to do so, because if you're going to take a very mechanical basis and say that a 1/2 point fall in rates, for example, should increase the value of those long-term contracts, whether you're a pipeline, a power company, a telephone company, or you own real estate, then obviously they're due to benefit. Plus, particularly on the real estate side, lots of them are selling at big discounts to their net asset values, which seem to be fairly solid. For the financials, particularly lower interest rates are obviously going to mean people refinancing their mortgages, and given it's mostly 5-year terms in Canada, there are lots of people coming off record low mortgage rates from COVID in 2020 who are going to see an increase in the cost of their mortgages. But obviously, if rates are falling, that increase is not going to be as big, and there shouldn't be as much fallout from that.
Gavin Graham is our featured guest. We will be back with Gavin